What's up, guys? It's October 10th, 2024. Pretty good day in the markets. We had multiple swings and directions. It could be a bull or a bear and make money. Daily chart has another gap I noticed today. It's been a while since we put a gap in. We had this gap up and we went sideways. So the high of this bar is 675. The low of this bar is 11.5. So there's about a 4 or 5 point gap here. Oh, let me use one of these squares. That shows us bullish pressure, but we are trading high in a range, so it's a small gap. There we go. Small. We'll see if it stays open or if it gets closed. Let me try and make it a little better. Yeah, so it's a pretty small gap, but it's still a gap. We have a two legs and then an inside bar. Man, pretty crazy bull channel we've been in. 45 minutes going more sideways. Kind of have 3 pushes down here. Bit of a flag. So yeah, let's just talk about the trades and the E-mini. You have a gap down. Oh, let me turn on the bar numbers. 2 seconds. So we have a gap down. Bar 1 is good for the bears. It's follow through. Bar 2 is follow through. Bar 3 is follow through. So we could be in some sort of trend from the open. We're getting follow through. But then look at bar 4. Why was bar 4 a bad sell? If you thought this was a trend from the open, there's a reason this is bar 4 is a bad sell. It's hidden. Gap down, leg 1, pull back, leg 2, pull back, leg 3, leg 1, pull back, leg 2. So it could be 2 legs down, second leg trap in our training range, or we could have 3 legs down. But there's something particular, even more screaming about this bar. Do you know what it is? It's an outside bar. And outside bars are ranges. So we have a leg 1, pull back, leg 2, pull back, leg 3. Outside bar going above 3, and going below 3. So this is a range. Buyers below, sellers above, and that's what happened. We had buyers below, bar 5, and then we race up leg 2, bar 6, and bar 6 ends up being a pullback, and then we get a leg 2, 3 here. Leg 1, pull back, leg 2, pull back, leg 3. Something of that nature. That was a little sloppy. Leg 1, pull back, leg 2, pull back, leg 3. Bears get their second leg, leg 1, pull back, leg 2. We're test bars 17, 18, 19. Starts to test the lows. It becomes a higher low here. So if you're looking for a continuation from the gap down, why are we getting a higher low? Bar 22, excuse me, bar 20. I'll give you 1 second here, guys. Thanks. I sneezed a couple times. Bar 20 is bulls are trying to break out above the EMA, and it's a higher low. So it's a strong it's a strong bull bar closing on its high. Starting to break above the EMA. 21's a strong bar closing on its high, fully above the EMA. So if you're short, I definitely think you have to get out now. You could be asking, is this a wedge top with 23, 24? It is, but it fails. Too much bullish pressure. There's a gap here. That gets tested with 25, and then so the bulls rally for a few legs. You can go leg 1, leg 2, leg 3. That's how I counted it. Pull back leg 4, or you could. My mouse is doing what it wants again. Or it could have been something like leg 1, trend line break leg 2, trend line break leg 3, trend line break leg 4. We have a trend line break here. So there's many ways to count this. You could also count it like this. Leg 1, pull back. Leg 2, pull back. Leg 3. I do think that was kind of the easier way to count it because this was like a channel. And we broke out of that channel and we got a leg 1, pull back, leg 2, second leg trap. testing yesterday's high. We don't quite make it up there, so there's a bear gap open right here now. You guys see that gap? And then I'm looking for this tool. And the bear started to sell. Like I got trapped right here. Like 1, pull back like 2, pull back like 3. Wedge bottom into the EMA with more than 2 gaps open. I thought bulls would keep trending higher, maybe broad bull channel. However, bears get 3 legs lower. Like 1, pull back like 2, pull back like 3. We reverse higher. We're at the previous swing support, 18, 19. We're at 45. We go higher. Leg 1, pull back leg 2. This is the high one. And then this whole price structure can get its own single leg. I thought that was a really nice one-to-one trade. What were the probabilities we go back and test the highs after this leg? I think the probabilities are higher that we at least test the lows before we test the highs. So I went for it. That trade made up the day. I got filled here. Strong reversal by the bulls. However, it ends up being a 2-bar reversal, and the bears get another few legs lower. So how could we have traded that? I did trade this. I scalped it. I went like this. And I entered on 57, but I got out on 60. I thought it was gonna be a double bottom, higher low, and then the day got it, and then that was that. I took some trades here, but let me go over the price structure. Leg 1, pull back, leg 2, pull back, leg 3, rally, wedge bottom. We're on the higher time frame support. We're above the higher time frame. It's acting as support. Very big tails with 53. Very big tail with 63. Bulls get a higher low. Again, that is not bearish market structure. 3 bull bars. If you're still bearish after you see about 1, 2, 3, 4 bars in a row, I think it's time to get out. Bears have had 3 pushes down. They've also had a fractal 3 pushes down. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4. Bears are getting trapped. They have to buy back shorts and rally. The trades I took today, I bought this bar. I bought this bar. I got out very quickly and reversed, and then I got out around this bar for some profits. Bought 20. I bought the low here and got out on 30. I bought this bar, got trapped. I actually hit out on the market right here, but this bar, it raced down and I had slippage and I got out here for like 6 points, which kind of sucks because it would only been a like 2-3 point loss, but hey, that's the market. Oh, it would have been 4 points, I guess. Excuse me. So I didn't lose that much. It was about 6 points. I guess I got it around here. Yeah, you could short the high of 43, but it's always in long because we have 10 bars here. We don't have 10 bars below the EMA. I like to wait for always in direction to flip before I trade that. So around here is when I realized we were flipping towards in short. This was enough collection below the EMA with the gap down. I thought I could get a leg 2 and I did. Strong rally back into the EMA. EMA is acting as resistance. Bear gap open. You can short 54 and go for a leg 2 of this. Let's see if this worked. If you shorted the high of 54, I think you would get filled. Yeah, you would on 63. So that's a great trade too. So there's multiple leg 2 trades. We have to keep in mind, like, this is a leg 1, pull back leg 2, pull back leg 3. Okay, but can this get its own leg? Is this a micro channel maybe on the 15 minute? Would you look at that? It is. So here we have that 15-minute micro channel. First pullback, second leg down. You see? So that's kind of how you can frame, like, what am I trying to say here? So we're counting fractal legs and then we're counting overall legs, right? Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2. Excuse me. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back. Oh my gosh. Leg 1, pull back leg 2, pull back leg 3. And within that price action, leg 1, pull back, leg 2, pull back, leg 3. So many nested bottoms, nested wedges, and then we rally. So let's just go over the one-to-ones real quick. So when we go over these one-to-ones, this isn't necessarily all the trades I took. I just told you guys the trades I took. So I see, so bears get a leg 1, or leg one, pull back leg two, pull back leg three, bulls get leg one, pull back leg two. I start to think around here, we can go long. So this is a leg higher, 1 to 1 here. I thought the probabilities were good. Oh, so this was interesting. I was reviewing my trades before this call, and my thesis was if I buy bar 13, we'll go higher before we go lower. And look, my stop actually never got hit. So it was right. I wasn't willing to sit through that pullback in case it was which I think is reasonable because we could have just had a meltdown. Gap down, second leg. So what I'm saying is gap down, leg one, pull back, leg two. So that's why I got out pretty quick. But playing the probabilities, we would have hit my target before we hit my stop. And we came very close to the stop. Okay, cool. Next trade. 4-bar rally. Here we go. 23 is the first pullback, high or low. Boom, we get filled. Okay, we see 30, 31. We like it. We think that deserves its own second leg. We buy the low of 31. Boom, to the tick, we get filled. That's crazy, actually. I didn't take that trade. I missed those 3 bars. I got out on 30. Okay, now we see this leg lower. We're like, wow, there's another micro channel with a pullback. But then we don't want to short above the EMA yet, so we wait for a breakout. Okay, we pull back. We see 42. I didn't take the shade because it's not always in short, but I mean, it's reasonable. See how it, oh, there we go. And you get filled right there. Boom, 1 to 1. Reverse is higher. Okay, first pullback into the EMA. Bears have a gap open. Range bound price action. Expect deep pullbacks, delayed second legs. Okay, deep pullback, delayed second leg. That falls in line with the price action. I went from body to the swing point around there, or it was maybe around here. I remember getting filled like on this low. Something of this nature. Boom, filled. Okay, now we see as we're in that trade, we get filled and we realize, whoa, this is strong enough for its own second leg. 54 is the first pullback. I didn't take 54. I took 57 because I wanted more confirmation after that big leg. But we're going to act like we know what we're doing. So we shorted the high. Shorted high 54 worked, and you got 1 to 1 there. You get filled on 63. I think it's good to stop trading here. If you try to trade this micro channel, there's really no pullback, so you just have to blindly buy, honestly. There are a lot of bear trends, so that's on you. And let me just go over the gaps. We have gap down, no follow through, reversal, sideways. We have a gap here. We have 2 gaps now. Channel, another gap here. And we have a gap here. Bears close that quickly, and we reverse lower here. We sell off again, creating another gap across the EMA. We sell off again here, creating gap. This gap gets closed quickly, and bulls put in their own gap here. However, that gap also gets closed quickly. Gaps get closed in range-bound environments. Gaps stay open in trending environments. Bears have 2 gaps open right now. These gaps are all getting closed. Weak channel. It's a channel, a lot of back and forth trading, but no gaps. Oh yeah, there's a gap right here. So yeah, there you guys have it. Let me know what you guys think. I hope you guys are learning. Hope these reviews are hitting a little bit better now that we're going over trades. We're still going over the E-mini. You can see how the market moves in rotations of legs and the market cycle, you know. We had a breakout. Leg 1, pull back, leg 1. Leg 1, pull back, leg 2, pull back, leg 3. And then we just went sideways. Kind of an expanding triangle. So yeah, many ways to see it. Count the market cycle, leg 1, pull back, leg 2, pull back, leg 3. Then we go range bound, or you can say the market cycle breaks out, leg 1, pull back, leg 2. Leg 1, pull back, leg 2, pull back, leg 3. Range bound, and then we channel lower to the bottom of the range and rally. Many ways to look at it. I hope you guys are learning something. If you learned something, share the show, drop a comment. Thank you for your support, guys. I will talk to you tomorrow. Keep studying, use your stop loss. Have a good one. Bye.